welcome to our year-end, the monthly blend. Tien and I really like to use the very last episode of the year to reflect on trends that we've seen over the past year, what we are working on ourselves in our own businesses, and also what we see coming down the road for founders in our startup ecosystem and other participants in the ecosystem next year as well. So, Tien, maybe you can start off and let's talk a little bit just about some of the trends that we saw this past year, both directly ourselves and through the experiences of many of the guests who make up a lot of leaders in the D&B startup ecosystem.
Thanks, Anthony. It's great to wrap up the year with you. It's been another great year, and I want to thank everyone for supporting our video podcast. It's been quite a journey for us. I think we're a little over 2 years now, right?
Yes.
And I've interviewed some great people and have had a lot of fun doing it. To answer your question, I think, from a funding perspective, well, just generally speaking, I think, this year has been sort of a transition year for a lot of early stage companies. They've had to slow things. Things have slowed up for them. Early stage companies are accustomed to moving super fast and trying to get things done as quickly as possible. But I think the market has sort of slowed things down for them. Not just the funding market, but also the buyers and customers have slowed down. But I think from a funding standpoint, which I know that a lot of our listeners are interested in, we've started seeing these things maybe 18, 20 months ago, right? When the stock market sort of readjusted valuation-wise, and then that was exacerbated in the first quarter of this year with what happened with Silicon Valley Bank and First Republic Bank. And I think that affected the early stage market as well. And as sort of the public markets, they sort of inform what the private equity markets are going to do, which then trickles all the way down to growth capital, early stage capital, and seed and angel funding. And so we're seeing rounds get delayed. In other words, a round that was going to close, say, in month one is now being extended out maybe 6-8 months because they don't want to take a down round. We're seeing notes, so bridge notes, ways in which founders can avoid a down round. But I think that I have seen quite a few down rounds ranging from, 25 to 40% from founder expectations a year ago. And they have to take the money. I mean, the alternative is not a good one. But, I had a couple conversations with founders yesterday, and I just basically said, hang in there and, don't be swayed by what's happening in capital markets, which you can't control. Focus on what you can control, which is building a great team, motivating that team, building products, doing the best you can to build a solid business. And then the markets, hopefully, well, they'll come back, right? Anthony, you've been around a long time, so you've seen the waves starting in the late 80s to the Russian debt crisis of 98, to the dot-com bubble, to 2008, great financial crash, and just we're going to see it again. And the markets do go in sine waves, up and down, up and down.
I think those are great points in terms of cycles. And I do think that one of the things that happens when it becomes more challenging to get capital, we came out of a period where there was so much capital available. So many funds had raised their own follow-on funds. There was so much pouring into new fund managers, and there was a lot of capital chasing deals. Valuations went very, very high. In many instances, hard looking backwards to justify some of those valuations. And when capital is very easy to access and very cheap relatively, you often as founders are not sometimes forced to be as efficient with your capital and to be as focused on the blocking and tackling fundamentals of the business. And what we've seen, like you said, some of the great unicorns and success stories come out of these more challenging cycles as companies really look at what it takes to not just to grow top line revenue at any cost, but also what it takes to build a business that has a pathway to profitability and sustainability. And I think that for companies that are able to achieve that, as the markets open up again, you're in a really great position to pick up that tailwind behind you and move forward very aggressively. And I also think that the other really important point you said is you need to recognize the market that you're in. And so the same business that was maybe raising at a 10 million valuation, a seed stage company, or 10 million cap, maybe right now to get that capital, you have to be at a 7 million or even a 5 million, like you said. And knowing that sometimes you just need to bring in and reset valuation expectations becomes important to bring in the capital that's necessary to keep going. From Connectpreneur events, though, I mean, you were still seeing, especially in the more early stage part, I know it was even more challenging for later stage companies, but for the really early part of the seed, you were still seeing many deals getting done.
We have been. And I think that's because there is always a market for great companies. And especially among high net worth investors, smaller family offices, smaller family offices, angels and angel groups, they're still looking to deploy capital. Like, for example, when the stock market crashes or adjusts, it doesn't mean that investors are going away. You do see smart investors coming in and taking advantage of great valuations. And I think you're seeing that also. You're just not seeing the velocity of deals being done, and also the time. It takes a little bit longer, I think, because investors are A, looking for better deals and better pricing, and B, they're doing more diligence, because there are a lot of market risks out there that have come to the fore with what's all been done. Yeah, I echo your sentiments about the easy money comment you made. When money's easy, it's almost like you got to put stress on a company or a person or anything in order for it to get better and stronger. And that's what we're seeing in the market, and we're seeing with companies. The more adversity that a company can overcome, the more set up it is for the future. So that's sort of the silver lining in the cloud. But it is tough for founders who are accustomed to, easy money, let's call it, to face a market where it's not so easy, And,
I also agree. And I think that for early stage founders in our ecosystem, there is a lot of support. I mean, to me, we've seen a continuing growth locally in our region, in groups, you look at, on the funding side, activity of TEDCO, for instance, which is, we spoke to them this year. They've been, very, very active in supporting early stage growth companies getting those first rounds of capital. We've seen some of our great accelerators like Conscious Venture Labs, Halcyon starting to set up funds as well to invest in early stage companies. We've seen some of our events like DC Startup Week continue to grow and expand and bring the whole ecosystem together in larger and larger ways. We just had an amazing DC Startup Week event not too long ago that I think brought a lot of value to the ecosystem. And so I do see that the supporting infrastructure of advisors, of service providers, of earlier stage accelerators, of accelerators adding funds, of state-driven investment vehicles, really this year I saw all of that growing.
Yeah, it's been great to see the groups that are supporting entrepreneurship thrive and new people come into the market, and also some of the existing ones like CVL and Halcyon. And let's not forget Next, because what you guys are doing is super supportive. You're, not just with your the way you advise companies from a legal standpoint, but also how you facilitate connectivity between investors and startups. For example, your Next Raise product, your Pitch Masters product. You guys are really doing amazing things to help these companies get capital and just to have the support that they need to grow. Can you talk a little bit about Next Raise? That's a real innovative and bold initiative that's been amazing, frankly.
Yeah, that was a very exciting new initiative for us this year. And what we really look to do is in our role as long-term partners of startup and emerging growth companies and our support of the ecosystem outside of our legal services, as you spoke about, is each year we've put a major new initiative into the market. So we had the first one we put out was our Startup U, which is the education platform for founders, the Pitch Masters, which you spoke about, our Next Marketplace, where we have over 100 service providers now outside of legal who are all committed to and supportive of the startup ecosystem. So if you need a 409A valuation, or you're raising a round of funding and you need D&O insurance, or you're a new startup company that's looking for a bank that understands and is supportive of early stage startups. So the Next Marketplace has continued to grow. And then, like you said, our very big initiative this year, which was Next Raise, was all around trying to create events around helping to connect startups and investors. The two major events this year. At each event, we had around 50 one-on-one meetings between investors and founders that ran through these events and really helped connect a number of investors and early stage VC funds in our region who participated to founders. So we're very excited and are looking to really build and expand on that. Our big focus as we go into next year, we hope to have some exciting announcements after the early part of the year, but our big focus for next year is really around investor readiness. So how do you help founders once they going into that process be investor ready for that process, since we think that really facilitates the amounts that companies can raise, the speed in which they can raise, the overall success of their round. And that is one of the key areas for us for next year that we are been working on and are very excited about.
Right. Speaking of investor readiness, if you work with hundreds of early stage companies and startups, and what one or two areas of deficiency do you see most commonly?
I mean, for us, the big things that you control and be ready for is, one, having data rooms set up, for instance, and having all of the documents organized in your data rooms and ready to go. And making sure that all of those documents have been cleaned up. And when investors go through the data rooms and all of your different documents, A, they're organized, B, there are not key documents like proprietary information, invention, assignment agreements for employees who provided IP to the business that are missing. And a lot of times when startups first start early on, you have a limited amount of capital and you're trying to deploy it against so many different needs. So you're trying to build a minimum viable product. You're trying to bring on a few advisors or consultants to help you. You're trying to just test the market with product market fit. You have to do your legal related work, your accounting related work, but you have a finite dollar set, and it's not realistic to say you're going to be able to do all those things to the fullest extent. And so sometimes early on, We find when we're working with startup companies on the legal side, if they hadn't been represented by an attorney who specializes in startups from the beginning, there are things that you need to correct before you go into that investment process. So in addition to having the data room, having all the documents, making sure nothing's missing, things that are incorrectly done, you want to be able to make sure are corrected, or things that were not documented are documented. So that's one area. Another big area is knowing how much to raise.
Mm-hmm.
And, you know, one of the things you talk about is when money is tougher to bring on, you're raising an amount that's going to be achievable, but also you're balancing, once you go through that effort of bringing in capital, as you know, once you've had a raise or a closing, it's easier to bring on a little bit more money to top up that initial funding than the first money that comes in. So raising enough money to give you a long enough runway to get to your next set of milestone achievements that will be critical to a follow-on raise. So that's kind of another area. And there are a number of those types of areas, like we said, with pitch masters, making sure your pitch is ready, making sure you've practiced it. So those are some of the things that are important to us when we look at investor readiness. And you had a very exciting year as well. And maybe you could just your review on Connectpreneur and the different initiatives that you have underway, and some of the new initiatives that you brought to market this year, and what you're looking forward to for next year.
Oh, yeah, no, thank you for that. Yeah, so we've been back to pre-COVID levels in terms of numbers of events we're doing in person in the Baltimore, suburban Maryland, Northern Virginia, and DC markets. So we did 8 events this year. Next week we're doing Connectpreneur and Tyson's. That'll be our 8th event in person. And we will have done 12 virtual events, and we're seeing the quality. It's funny, the numbers are down in terms of the number of attendees at our events. And it's funny, we do talk to a lot of other event managers, and while the numbers are down, I think the people that are coming are more hardcore, more sort of engaged members of our community. So I think you have a better engagement, better quality, and even though you have fewer numbers. So that's one key learning that we've had. We're very happy with the results. The quality of the presenting companies has been fantastic. The investor participation has been excellent. Well over half of our companies that are presenting at our events are getting funding from investors they meet on our platform. We did experiment with a new product, which is a premium product, and I think you liked it, and so did a lot of our other partners. We went for a smaller event. So before COVID, we were 400 to 600 people. And after COVID, right around 250 to 300. And we decided to do a 150 person event in DC at the City Club. And that turned out to be, and that was an experiment. It was just going to be very high end, try to limit the number of service professionals coming and just focus more on investors and founders. And that turned out to be a big hit among our partners, our sponsors, and our attendees. And the presenters had great engagement with investors. So I think we'll probably do a couple more of those. I don't know if that's going to be where we're going to go, with all of our events, but certainly there's a demand for our bigger events, which Northern Virginia tends to be our market for the bigger events, and Rockville, Bethesda as well. But I like the smaller events for maybe Baltimore, for DC for sure. So you'll see us do some of that. We're going to cut back on our virtual events. We're going to go from 12 to 9 next year. I think, people are getting Zoom fatigue. And I think if we do fewer events, then people will be looking forward to it. And, we'll be able to have a higher quality experience for everybody involved. And we brought on a full-time marketing manager this past year. So you're probably seeing a lot of the results of that through our social media channels and marketing channels. And I think that's been a great improvement for us. And we're looking to possibly go into other markets in the coming years. So we're looking at San Francisco with more healthcare focused event, and then possibly Austin at South by Southwest, or other markets. I don't think we're looking to expand crazily geographically, but where there's a demand in the marketplace, I think we'll be doing that. And then our private events business has been going great. Unfortunately, because companies are starved for capital and looking for other channels, unfortunately for them, fortunately for us, we have that network of 4,000 high net worth investors and angels and private investors. And I think that has been extremely successful for a lot of our issuers. We've raised a lot of money for fund managers as well as companies. I think that business will probably be around for quite a while because we have the network. The investors really want to find great deals, and they, to some degree, rely on us to help curate great opportunities for them. So, we're very excited about the coming year. I think that, change is a good thing. The last 2-3 years, it's made us stronger. It's made us more creative. Being in the events business is not an easy business because people are still trying to figure out, the various dynamics of the post-COVID reality of life here. But I think the post-COVID reality of life for us is focused on quality, not being the biggest, but trying to be the best, and just delivering a, super awesome experience for everyone who's involved.
And as I listen to you, in addition to putting an amazing solution into the marketplace for founders, you approach it, you can hear your entrepreneur roots in that, in terms of having different products available for different segments of the market and have served different needs within the market. And the idea of trying something new like you did. We loved that premium event, the smaller event. We loved the large events as well. Like you said, we are huge fans of you and your team and everything that you do for the ecosystem. But it was also interesting to participate and see how the dynamics played out in that different type of event, and that you found a place for another option for connecting founders and investors that you're now worked really well for everyone involved that you'll be expanding on this year. So, you're constantly, just like the entrepreneurs that you're supporting and helping, evolving and growing yourself.
Yeah, it's interesting, but yeah, so that's thank you for that. But I feel that way too. We're not afraid of, I think, being entrepreneurs, and you are one as well. We are not as afraid of change. We're not afraid of experimenting. We know that you have to be nimble and flexible and iterative in how you approach things. And we're constantly collecting data and feedback and trying to get better and better and better. That's why, that's sort of the entrepreneurial mindset. When we hit, rough times or rough patches, entrepreneurs who have that kind of mindset can get through better because they don't necessarily view it as bad news. They probably view it as opportunity. Maybe how do I minimize the damage and maximize gain because of this situation? And I think that that's how the entrepreneurs that you and I work with should look at the capital markets also. How can they minimize risk and maximize their potential despite, the tightness in the market today, knowing that it will change, and trying to do things that set themselves up for what's to come. And I think what Next is doing, and maybe what Connectpreneur is doing, is as the markets sort of come to us and we iterate our products, we will be in a very good position. I mean, that's why Next also, congratulations on being nominated again for the Innovation Award from Legal Week. You guys are amazing. And the competition you have are, sort of the brand name that you see in big law, nationwide. And the fact that you're able to consistently, be the David against these Goliaths, and, that's just to what we're talking about, being entrepreneurial in a law firm, and being recognized by your industry peers is very well deserved, and congratulations on that. But because of your innovation and the way you're shaking things up in the legal profession for startups, you're able to succeed.
Thank you. It was very exciting for us that after several years ago, getting the award for the best law firm for startup success, and now for 24 being a finalist again, and also being recognized for most innovation in legal services. So we are excited. We really focus on our mission, which is broader than just the underlying legal services of empowering startup success and really bringing new approaches and new innovation and new ways to help startups do that. Is very exciting. So thank you for mentioning that.
Yeah. What other innovations can we see out of Next?
We're always continuing to evolve the core parts of our solution. So how do you bring more predictability to legal services? And so we've done that, as you know, by productizing a broad range of legal services into dozens of fixed price packages that combine the strategy and the legal counseling and advice and the legal documents and the negotiations all wrapped into a fixed price package to provide that predictability. We continue to expand on customer service with customer relationship managers and using technology to make things more collaborative and more efficient. There's been an explosion of new technologies in the legal space, and we're on the forefront of evaluating and where it provides value to our customers, our clients, incorporating it into our platform. So we expect to continue to do more of that next year. And then, like I said, in addition to expanding our product line of fixed price packages, one example of that this year is we started to get more, in addition to the companies, the startups we work with in our region and around the country, we started to get more startups from overseas, from international startups who want to enter the U.S. market and for access to U.S. capital and U.S. strategic partners. And so we created a product line specifically for international companies entering into the U.S. market. So those types of new additions to what we do. And then, like I said, for us, a big focus next year is going to be around investor readiness as an important theme for us, and looking at some really exciting ways to achieve that and to bring value to startup companies through what we plan to bring to the market. And I would say, hopefully, people will tune back in, and we should have some exciting announcements in Q1 around that.
Fantastic. I'm looking forward to it. And I know some of the preliminary conversations you and I have had is it's totally innovative. It's different. No one else is doing it. And I'm really happy for what you're offering to the community.
Great. Any final thoughts, Tien, that you want to share as we ring out our last episode of 2023 and look to 2024?
Yeah, I think just message to the founders out there. I know it's very tough. This is what's going to make you stronger and better in the future. I think we have a good, 2 weeks, 3 weeks till the end of the year. Spend the next 3 weeks doing a lot of thinking and reflecting and planning and getting your sort of mindset right, so that, you go into this year knowing it's going to be a tough year. It's a transition year, but can worry about what you can control. Try not to worry about what you can't control. Accept the realities of the market, and you have limited energy and time, and just focus that like a laser beam on trying to build a successful business and affecting what you you can do, which is serve your customers or create an awesome product better than anyone can create. Building and motivating just the best group of people, the team, and things will come back. So I would just say my message to the founders that listen to us, Anthony, for the coming year is stay positive. And, your team is counting on you. Your customers are counting on you. So you have to try to do the best you can to stay conscious and stay positive. Be excited about the opportunities that are going to come your way. You're entrepreneurs, and that's what we do as entrepreneurs. We are able to shuck and jive and make the necessary adjustments to deal with all the stuff that gets thrown on us on a daily basis, whether the times are good or bad. We're always facing challenges. So that's my message. And want to wish everybody great, happy new year, and Happy Hanukkah, Merry Christmas, Happy Holidays, and just all the best for the coming year.
Great, thank you. And I'll add, just on behalf of Tien and I, we want to thank all of our guests. We had amazing people join us and spend time with us during 2023 on the monthly blend, and the insights that they were able to share with our audience and their contributions as leaders and pioneers in our ecosystem, in driving the ecosystem for startup companies forward, is so appreciated by everybody in the ecosystem. And we were honored to have all of you as guests on our show this year. So thank you to all of our guests. And we look forward to continuing into our third year with the monthly blend, and just wish everybody happy and a healthy new year. Thank you.